The next area that I want to talk about is micro private equity. So that's the area that I'll be putting most of my time, moving forward. So I'm actually starting a private equity fund in the next 2 years called Malcolm Garvey. You can see the name of it, where that came from, whatever. Yeah, but the buying and selling of businesses. So real estate is the buying and selling of property. Micro or private equity is the buying and selling of businesses. And transforming those businesses, for another buyer to, take to another level, like a higher level, whatever. But if you're thinking, from an entrepreneurial perspective, or if you have like a 9-to-5 type of job, real estate and private equity are two areas in which you can invest your money to get higher and higher returns, right? So when you're thinking about that, there are a lot of fund managers, F-U-N-D, fund managers that are coming out, especially of the Black space, that are doing this, that are investing in businesses so that they can grow. Because I think a big misconception is that, and that we see, running the Black Business School, is people think that they have to actually be entrepreneurs to make wealth and to create and generate wealth. When really all you have to do is be an investor in other people who are doing excellent things to generate that wealth as well, right? And I think that point should be, hit home. And of course, there's stocks. Boyce, of course, talks a lot about stocks, stock market, S&P 500, investing in index funds. You have stock options, you have crypto, all of those different types of things as well. One area that is often overlooked that we're going deeper into is this tax reduction strategy. So this is a square, rectangle, however you want to say it, because entrepreneurship, micro private equity, real estate, and stocks have equal proportion in terms of its importance to your overall wealth strategy, right? So increasing income and income sources. All four of those things have an equal type of importance for diversification purposes. But who's the number one taker of your wealth? The government, right? So there's an article by a publication called ProPublica, maybe like 6 or 7 months ago. And it was talking about how much the average family, let's say like they make $70,000 as a family, how much of their income do they pay to the government in taxes? What do you all think that number was? You said 60? No, to the federal government. So the highest tax rate was 39%, but it's marginal, whatever. But it's not that. It's not 60. Go ahead. 20, 18%. All right. 25. All right. The winner's right here. Yeah, so it's like 17.3%, 18%, something around that. What do you think was, like, for the richest of Americans, what percentage did they pay in federal taxes to the government? 5%, 3%, 3. Perfect, right there. 3.4%, I believe, was the number to that. And that difference comes because the tax system encourages investors and don't respect workers, right? So they get low tax rates because they can write off a lot of stuff and claim things as capital gains, meaning you sold an asset, so that is taxed at a lower percentage than your ordinary income. And that's why investing is so important, is because it reduces that tax burden as well. So think about that. So one person's paying 17%. Let's say you have a rich person who's not paying all in taxes, right? And that is they're paying 7% instead of 17, and you make $100,000 a year.